Residence Equity Line of Credit, godsend service for your financial needs. Possessing a home is the greatest American dream. In addition, having a house to conserve you from monetary requirements adds up to the benefits of owning the greatest American desire. You have actually tightened your belt while you are saving for your residence. Currently, that you have enough equity in that home, you might chill out a little bit by making use of your equity through Residence Equity Line of Credit. Residence Equity Credit Line or HELOC can assist you in myriad of economic necessities. It can assist you have a fund when you require it and for whatever objective you might require it. Although, you ought to take care due to the fact that placing your house as security might trigger you to lose your home if you stop working to pay your financial debt. This must make you assume lot of times before you start taking cash with house equity line of credit. Nevertheless, if your function of securing money using home equity line of credit is to spend for medical expenses or kids' university education and learning, these expenses are inevitable. Therefore, obtaining cash by means of house equity line of credit can be your best choice. Additionally, if you want to combine your financial obligation, HELOC or residence equity line of credit may also be advantageous. This is since contrasted to bank card as well as other unsecured credit report facilities, the rate of interest in a home equity credit line is rather smaller sized. An additional benefit of this means of securing cash is that consumer credit's passions are tax deductible. However, having said the advantages you may have from getting a credit rating with home equity line of credit, you might also need to take a look at the possible repercussions if you fail to pay your financial debt. One of the most important consideration is the opportunity of losing your residence to pay off the debt. It is thus recommendable that while you are taking into consideration the adaptability of a line of credit, if you require a round figure fund, you may take into consideration taking out a residence equity lending instead. This is because in a residence equity car loan, you pay the rate of interest and also part of the primary financial debt regularly. This remains in comparison to the variable interest rate that uses in a house equity line of credit. Additionally, in a house equity credit line, your payments balloons at the end when you require to pay the primary amount of financial obligation. The flexibility of the residence equity line of credit extends as much as paying only the interests and also paying the entire principal funding at the end of the term. This makes it fairly hard, and also if you are not ready for such balloon payment, the threat of losing your home is intrinsic in this situation. This is the reason that economists advise that before you authorize any type of contract that puts your residence as security, you may need to inspect yourself a little bit. Will you need the cash lump sum? Ask about house equity car loan. Do you require fund periodically? Ask about house equity line of credit. Think about also requesting for settlements terms, rate of interest as well as what problems will certainly make the lending institution consider you in default. These inquiries as soon as answered might aid you understand if putting your house as security is the best remedy to your monetary demands. There are various other credit scores facilities, because of this, you might require to do your study first before choosing. Numerous debt management sites can assist you recognize the eccentricities of economic administration that will certainly aid you prevent losing your most valuable property. House equity credit line rate, major factor to consider when getting car loan. House equity credit line is a credit score center where you secure settlement of your car loan by your equity on your residence. This is advantageous for those you that have understood or will recognize the greatest American dream, ownership of their own house. Numerous reasons lead customers into capitalizing on using their residence as security, such as in a house equity credit line. Largely as the reality that is compared to various other finances including bank card as well as various other unsafe credit history, home equity line of credit rate is reduced. Furthermore, the passion paid in a residence equity credit line is tax obligation deductible. Therefore, it helps trim down the tax obligation payables. An additional aspect for the appeal of residence equity line of credit in addition to the residence equity line of credit price, which is reduced, is the reality that you can obtain a funding of as much as 85% of your overall equity on the house. This is particularly vital for repair work as well as remodeling necessary to make the house safe and also for living. Additionally, consumers choose to take out a car loan against their equity for purposes of children's education and in some cases, to resolve clinical expenses. Combination of financial obligation is likewise another advantage of obtaining a finance utilizing your house as collateral. This is because of the convenience that you only owe one institution with all your previous and prevailing financings. The house equity line of credit rate is particularly valuable in this instance. You combine your financial obligation and also you lessen the rates of interest payable, in addition to the truth that rate of interests are tax deductible. Consumers make the most of the convenience and also flexibility consisting of the reduced house equity line of credit price. Nevertheless, it should not be forgotten that utilizing your house as security requires some dangers. Primarily, you are at risk of losing your house. If it happens to be your primary dwelling, take into consideration the problem of expulsion. Financial experts therefore suggest that if you wish to make use of residence equity line of credit and also the affordable home equity line of credit price, you may require to do your research. Search for the most practical interest rates, because rate of interests in a home equity credit line might vary. You might require to locate the most affordable rates of interest and the most adaptable settlement terms. Ideally, prevent the attraction of paying passions only on your credit line. This will prevent being entrapped by the balloon payment at the end of the term. Preferably, select to pay the passion and also part of the principal regularly. You might also require to get in touch with the loan provider. What are the problems that will make them consider you as in default, as well as what conditions you may need to follow to prevent balloon payments, which you might not be ready for. It is hence suggested that you look at the application a little bit and also ask all the pertaining inquiries in order for you to make sure that your residence will not go to danger in the purchase. It may additionally be valuable if you can discover various other sources of information to direct you with the smart choice of getting loan versus your residence, despite the factor to consider of residence equity credit line price. The internet might be a good area to begin even before you call an agent. Residence equity line of credit price, major consideration when obtaining car loan. Home equity credit line is a credit report facility where you safeguard repayment of your lending by your equity on your residence. This is advantageous for those you who have realized or will recognize the best American desire, ownership of their very own residence. Numerous factors lead consumers right into capitalizing on utilizing their residence as security, such as in a residence equity credit line. Mainly as the fact that, as contrasted to other financings including bank card and various other unsafe credit rating, house equity line of credit rate is lower. Furthermore, the passion paid in a house equity credit line is tax obligation deductible. Hence, it aids trim down the tax payables. One more factor for the popularity of house equity credit line on top of the residence equity line of credit rate, which is reduced, is the reality that you can secure a finance of up to 85% of your total equity on the house. This is particularly important for fixings and also remodeling necessary to make your home safe as well as conducive to living. Additionally, customers favor to secure a loan against their equity for functions of children's education and learning, and also in many cases, to resolve clinical costs. Consolidation of financial obligation is additionally an additional advantage of securing a financing making use of your house as security. This is due to the benefit that you just owe one establishment with all your previous and also fundamental loans. The residence equity line of credit rate is particularly useful in this situation. You settle your financial obligation and you decrease the interest rates payable, on top of the truth that interests are tax insurance deductible. Customers capitalize on the convenience as well as adaptability consisting of the reduced house equity line of credit price. Nevertheless, it should not be neglected that using your house as collateral entails some dangers. Primarily, you go to threat of losing your residence. If it takes place to be your primary house, consider the nightmare of eviction. Financial experts for that reason recommend that if you want to benefit from home equity credit line and the practical home equity credit line rate, you may need to do your homework. Look for one of the most affordable interest rates. Due to the fact that passions in a home equity line of credit might be variable, you may require to locate the lowest rates of interest and one of the most flexible payment terms. Ideally, stay clear of the lure of paying interests just on your credit line. This will stay clear of being trapped by the balloon payment at the end of the term. Preferably, select to pay the interest and also part of the principal on a regular basis. You may additionally need to talk to the loan provider what are the problems that will certainly make them consider you as in default and what problems you might require to comply with to stay clear of balloon payments, which you may not await. It is hence advised that you look at the application a bit and also ask all the relating questions in order for you to make certain that your dwelling will certainly not go to danger in the deal. It might additionally be handy if you can discover various other sources of info to assist you with the intelligent choice of obtaining finance against your dwelling despite the fact